All right, traders, welcome back to the channel where we go over the Nasdaq, the SP 500, and exactly why the stock market is crashing. If you were here previously, then you get all this information in advance and you knew that this was coming. I'm giving you the information you need every day as quickly as possible and the key news that is moving the market as well. Like, subscribe, do what you got to do. Let's get into the reason more crash is coming. Going into this week, this is what we were looking at. I mentioned you might get some love going into Monday, maybe even Tuesday, based on what was happening with hedge funds. We knew hedge funds were doing one thing, and that was de-leveraging their positions, and they were adjusting so they weren't to become the new Bill Ackman. Bill Ackman lost about $500 million on that Netflix investment, and there's a lot of volatility going into the expectations of these earnings, specifically when it comes to outlook with inflation and what's happening with Russia. So what you saw on Thursday and Friday was hedge funds selling positions locally to just have a liquidity so they could potentially buy things as they dipped, and they could prepare for the potential of this massive, terrible earning season. And it's worth mentioning this is typically the best earning season of the year. So it sets the tone across the board. And as we look at this, this is what happened. This was the big day. This is what we knew things were going to spice up. I let everyone know in the last video, you had Microsoft, Alphabet earnings for today. And let me tell you something, this is what happened. Google came out and they reported a slight miss on revenue and then a bigger miss locally, about $1.20 miss on EPS. But this is the reason, and what I want to talk about specifically here is on April 20th, 2022, the board of directors of Alphabet authorized the company to repurchase up to an additional $70 billion of its Class A and Class C shares. So when you hear that, you're like, oh, well, this might help the stock. And what they're trying to do is on the last earnings, if you don't know, it wasn't that great. They started to drop and they announced the stock split and Google went crazy. Amazon did the same thing. What's Google doing today? Even though they're doing that buyback of locally $70 billion, they're down over $110. Before they announced that, they were down at 2,200 flat. This is most likely going to continue. What about Microsoft? Where's it at? It's sitting at about break even. They're going to be announcing outlook. They haven't gone over outlook yet, but I project more blood, and I know Russia is affecting this. Supply chain still an issue. Inflation at all-time highs. It's not getting any easier for the market. Nasdaq, how's it responding? This is what we all want to know. It's terrible. It's looking absolutely terrible. So on a broad perspective, over the next 2 days, I see more blood coming out. Boeing may beat. Spotify's probably going to miss, and you're just going to see more blood. I think Facebook's going to also set the tone for a lot more blood. So today, tomorrow, going into Thursday, blood. You might get love, you might get hope right here going into Apple and Amazon. I don't know how they're going to post, but we have to project more downside. But I'm just trading more to the blood, more towards the downside on puts, things like that, as I see this continue to come out on the downscale of the market. And we know these are going to continue to keep dropping. So as we look here, I told you guys about 2 videos back that Facebook was the only earnings play I liked, the 150 puts going into May 7th. And you've been just absolutely getting clobbered. Why is this happening? Because of what's happening in Russia, what's happening globally. Users are getting off the platform. And Russia was a mass exodus based on the blacklist. So I see more blood coming out. And overall growth on tech is just there. It's slowing down. It's getting hit. Now, if you're watching on the previous videos, looking at the overall Nasdaq, I said 3,000 is coming. You broke straight through it today. No even support there, ladies and gentlemen. You went straight through 13,000, and now you're at locally 12.8. And if you do not get back in this zone by tomorrow, I'm telling you right now, 12.5, 12.4 is on its way. More downside, more blood. Now, what were the hedge funds doing? What was big money doing today? As we get into here and look at our indicator here of the heat map, this is going to show you what's really happening. Black represents no buying. Red and orange represents the most buying or actual liquidity where they're buying or selling shares. So you can see they're buying here, these walls, and you just break through over and over. But what I want to highlight is going to be this blue line down here. These are hidden dark pool iceberg orders, if you will. And you can see there was one major buying level here, but all day long, look what they're doing. Hidden sell orders, sell orders, sell order. These are not represented on the heat map all day long. This tells you hedge funds were preparing for the blood. This is not shocking them. They are making money on the downside. They saw this coming. They've been looking at the same data we're looking at. Inflation is here to stay and tech is getting clobbered, and you're officially about to get into the stages of the recession we were mentioning. And guess what's happening? You're breaking All the patterns are just showing here through the intraday day trading. You start forming some of the higher lows and they break and it just gets started. So if you're interested in looking at more of these trades, the Discord link is down below. We're there all day live as well. But again, we're giving you the key content here. I'm telling you the way the market's going to move, absolutely free, and I'm going to keep you posted. So as we look at tomorrow, looking at SPY, what am I looking at? SPY is in this zone, and I call this zone the depths, because if SPY does not hold this area, the depths, and why are we calling them that? Because if you go back to February and March, these are your two lows. Your low right here of about 410.80, and then your lows in March at locally 415.80. $5 right there. If you do not hold this zone, you are tanking and you are breaking $400. I promise you, you are coming down. Not financial advice. Just do your own DD. Take it with a grain of salt. But as we've been looking at the market, have we been right? Have we been giving you accurate data? Have we been biased? No, we are unbiased when it comes to the channel. That's what we said. There's probably upside coming into Monday, Tuesday. But what's happening now? Blood, blood, blood. Now, as we look here as well, what's a key indicator that can show us that bears have control? Look at this. Over the past month and a half, your volume has been declining. What happened today and yesterday into Thursday, give or take? Bears are taking control, breaking the trend. They are dominating the market. What is big money doing? Do I have to remind you? They are selling. So you're getting all this information and it's telling you the same thing. But you're saying, Tyler, what do I do now? How do I look at the market now? What am I playing? What's the overall? Do I get Facebook puts? I'm not telling you I want to buy anything right now. I'm not saying that. But I'm saying if you do not hold this area, it's more blood. So right now I'm looking at this. I'm thinking possibly you get some downside into tomorrow, and then you're looking to hold this range for potential buying opportunities to bounce back up. If you do not hold this area, you are going lower and you're going to break, or you're going to at least on the minimum test $400 on the S&P. And things will start to heat up rapidly from there. The talks of the recession will grow even more rapidly from there. You will not have the president of the United States saying that a recession is not happening. There's no inflation problem. Reality will set in instantly. Tomorrow, you're going to get the actual home sales data once again. I'm sure we'll be surprised looking at that. Things are coming in, but I also want to cover what's going on with yields. And if you haven't been following, this is the yield inversion, which is the reason why we're so concerned with a recession. And as we get into here, this is the daily time frame here. I'm going to go to the weekly really quick so you can see everything. I'll get you guys out of here. But as you can see, you're at the main crucial point. These are four key areas: the .com crash, the housing crash. This is 18. We saw a dip, but the structure that Trump had in place as far as getting people spending, it worked. But then you had the overall COVID crash, and then we just had to help the economy at all costs. But what's happening now? You're right back there. As we pull the S&P up here, just so you can compare what's happening right now. Is the market dropping? What's this? The indicators telling us here. And as you zoom in, it's clear as day. You are topping off here on the actual yield inversion. You're getting that inflation key indicator there. And I believe you're going to see some stagnation here, and then you're going to start popping back up in the beginning of the month, beginning of May. That's when the rate hikes are coming. You're going to get fully inverted roughly around that area, and you're going to see more downside. It's going to be a bloody summer. Prepare. The housing market, I see it getting hit very hard as well. Everything in general looks very bearish. Inflation is just getting started as well. Like, subscribe, do what you gotta do. More content is coming, and I'm giving you the best information and the most relevant news so you know how to trade your stocks every single day. Have a good one, traders.